Hi, everybody, and welcome to the Middle Class Investor this week. I'm Seth Martin, your host. It is a little after 10 o'clock on Friday evening, April 7th. And started off today with a chart of the Dow Industrial Average, mainly because I'm going to show you a chart later on. The truth is the S&P 500 and the DJIA follow a very similar pattern, and so we're going to look at the Dow Jones Industrial Average. So right now we're currently in a pullback phase of the market, but it's kind of slow going. It's not happening real fast, but we should see it pick up soon. Maybe we'll get a slight increase in price above today's high before that happens, but not much more than that. So if we do get some price action above that, it'll be just slightly above that, and then we'll probably see pretty good movement back to this lower trend line here that marks this entire move. So we're not really in a place where you could hop in for the next wave up. We haven't pulled back far enough, and these you get your first wave and then your second, or your A, B, and then C is usually a pretty good wave, and then we get some counter trend, and the same thing can repeat itself until we got into this lower part of the channel. So if you're itching to put money to work in the market and you're not currently in there, I think I would probably wait. But that's up to each of you and your particular risk tolerance, things like that. Most of you have 401ks, which is fine. I can't get off this page. There we go. And you've probably been holding this whole time, maybe even back into here. And so, it's kind of scary when this right in here happens. But this was a wave 4 in this larger. Here, let me show you. Let me pull this up and put was that 20 years? I don't know if we needed to put 20 years in. We could have put 10 probably. There we go. So from the March 9 low, this is all one series of waves up, and we're near the completion, although we're going to have pull back into this area and then a rally up, maybe into the 22,000 area on the Dow. Okay, usually when we look at one of the indexes, such as the Dow, we then look at the VIX. We look at the 13-week Treasury. Let's look at the 13-week Treasury. We get off this chart and go to a 5-year chart. So you can see interest rates are really taking off now. Once they kind of busted out above this line, we talked about that the Fed would raise rates. We kind of put this blue box for support, and interest rates just keep rising. So if we look at the 10-year, the 10-year is the most important interest rate. I just look at the 13-week to see whether or not the Fed's likely to raise rates. As you can see here on the 10-year, we had a pullback into here, and it looks like now we're bouncing. So remember, we're looking for a pullback on this, so a deeper pullback. This is likely kind of a 1, 2, 3, 4, and then 5 up into here. But we're likely to see some deeper pullback that'll come back and close this gap, maybe even retest that line somewhere below 2%. And this pullback right in here is the pullback you should use to start moving out of some of your bond funds. And as we get closer to it, I'll bring it up again, but this area right in here, this pull down, as we pull into this area, you want to be getting rid of your bond funds somewhere along in here. All right. I don't want to beat that to death. I've beat it to death before, and probably beat it to death when it gets a little closer to the next wave up. But for right now, I want to just let that go. Let's see, what else do I want to look at today? There's really not that much to look at. The S&P 500, the Dow, and I think the NASDAQ were all down this week, if only slightly. You can see here the close was right here at that box. The market gap down, and then ran back up. So, excuse me. So for the week, it's technically down. I forgot. I lost my train of thought there for a second. I apologize. The global Dow, we can look at that real quick. Sometimes people look at the global Dow. You can see it made a new high. It ran up in a fairly looking counter trend move up into this high. It could go slightly higher as the remaining waves subdivide out, but this, for the most part, looks fairly bearish to me. After it stops going up, probably going to get some sort of pullback, and then a little bit of a rally higher, and then we should see the bottom drop out of that baby. Excuse me. Let's just go over to the currency markets and gold. I think those are the most interesting right now. Excuse me. You can see the euro. Man, I apologize. I got this little tickle. I think I'm going to drink a little something. You can see the euro looks like it's well on its way to making new lows in this run here. Still got a ways to go, but we should see it break this previous low here, just below this previous low. And then we're going to see a pretty darn good rally in the euro, so which usually means bad for the dollar. So look for that coming up here. Okay, let's see. Look at gold. Gold is making a really, after this pullback into this area, it actually pulled back a little further, but it's starting a real strong move here. Real shallow pullback into this support, and we'll probably get a rally well up over 1380, 1390. And but then look out below, because I think gold's going to fall in conjunction with everything else that's denominated in dollars soon. Silver and gold look very similar. Silver pulled back a little further today than gold, but they look very similar. I don't usually even try to contrast them. So I want to go to this chart that we got from Elliott Wave and just show you. This is the Dow Jones Industrial Average. This is the February low here, and you can see we ran up. This is the larger degree here, so a number with a bracket around it. And then these are smaller degrees here. These are minor waves. These are minute waves. They call minute. And this 4 wave here, that system is a primary degree. So we've talked about this before, how you can see it here, how this was this 1, we got the larger 2, and then we had this 1, 2, 3, 4, all inside of 3. This is very common inside Elliott Wave. You get these subdivisions of waves, and so as you can see, I want to focus on this area right up in here. We're looking for a pullback into what would be the trend line here. Let's see if we can extend it just for grins and giggles. Yeah, so see, we extend it there, so we're going to get some sort of pullback here. And then we're looking for new 5 waves up, above, all above, ending above this high here. Oh, man, this allergies are getting me. Apologize. So that's kind of the big picture. The really big picture, I don't have a chart up, but as we get closer here, I'm going to show you the really big picture and show you how you really need to manage that this next bear market much differently than you ever have before, because we've got a much larger degree trend, 5-wave trend happening that really goes back to it's like a 200-year-old trend. So really want to be careful. I mean, you can get totally wiped out, and if you're in the wrong things and not paying attention to your account. So that's the thing that I'm really trying to keep you guys out of. Is just the 100% nastiness that is likely going to come when this is done subdividing up to the upper side. Okay. It's kind of a light week. There's just not that much going on. The markets were, you ran up, ran down, but for the most part, it didn't really gain any ground in the major indices. Now gold moved a lot, silver moved a lot, oil moved quite a bit. Let's look at oil. Well, I don't have oil, so let's see if we can type it in. I don't know. I think you have to type in more than yeah, so here's oil. Yeah, so oil was a little bit more positive. This move might have another move up into a high, and then we'll see a pretty good pullback into this area down here. So look for that in oil. That's really it with those markets. I just don't have that much to say this week. There's just not. Of course, you had this bombing over in Syria, which had a little effect on the overnight futures, but really didn't seem to have much effect on the market this morning. So, but you gotta watch out for these geopolitical things, because they can have a temporary effect on the trend. All right, everybody, that is it for this week. And the Middle Class Investor, really, the charts this week they're not super revealing. So, there's just not much to say about this week's price action. So hopefully you're not too frustrated with that. Sometimes the market goes through these quiet periods. I mean, we had if you really zoom in on this, this was kind of a big day. This was kind of a quiet day, although a large range day. And then you got this doji here. Well, everybody knows that these dojis are, where the market's indecisive. It could go higher, it could go lower. And, of course, it decided to go lower. So, what we're looking for here on this chart, we're looking for, this could be A, and then we're looking for some sort of B wave that might take us into here, and then some sort of 3-wave that would take us down to here. And if we get that, we shouldn't have a lot of difficulty in timing this area right here to put some of our money to work. All right. So let's see, how did I get into this? Okay, looks like I got rid of it there. So, just to recap a little bit here, the markets were down to flat this week, and that's not going to change the trend or do anything drastic like that. So, I think this is a wait and see week. We just kind of sit back and see how next week looks,